Bank earnings, back to those, have been coming rapid fire this morning, and now Citigroup's numbers are out. Leslie Picker, thank God we have Leslie Picker because I haven't even looked at him. Leslie joins us now with more.
I am going through them now, Joe, but it appears that Citi was able to notch a beat relative to street estimates on both the top and bottom line here, reporting revenue of about $18.5 billion compared with estimates of $18.3 billion. In terms of the bottom line, 163 compared to estimates of 142. So significant beats on top and bottom lines. You can see those shares down about 1.8% in pre-market trading on these results. Let's get through some of the details here. Overall, we saw revenue increase by about 6%, but net income decreasing 25% during the quarter. That's largely similar to a lot of Citi's peers. Operating expenses did go higher. They were up to about $13 billion during the quarter, an increase of 8%. That largely has to do with the transformation that Citi is undergoing, inflation, volume-related expenses, and the like. Their cost of credit was $1.4 billion during the quarter. They saw loans tick down versus the prior year period. Deposits also down. Both of those were kind of on a similar trajectory, down about 3% versus the prior year period, but CET1 ratio up to 12.2% for Citi, so approaching the target that they had laid out there. Investment banking down about 64% during the quarter, which is the steepest drop that we've seen among its peers reporting this morning. That's largely due to just overall client activity being down, and the areas that Citi does investment banking have not been as active. Think SPACs are a particular strength for them. There hasn't been as much SPAC activity this year. Retail services revenue was up, largely higher due to NII, net interest income, that helps, that's helped by rising interest rates. So shares have come back a little bit, now down 1.6%. Just in terms of JP Morgan, dug through that release a bit more, guys. There was the credit cost that you mentioned of $1.5 billion that included the $808 million net reserve build. Jamie Dimon commenting in the release, providing some additional macro comments, not too dissimilar from what we've heard from him before, but he notes that there are significant headwinds immediately in front of us, stubbornly high inflation, leading to higher global interest rates, the uncertain impacts of quantitative tightening, the war in Ukraine, which is increasing all geopolitical risks, and the fragile state of oil supply and prices. So not too surprising that they would add an additional $808 million to its net reserve build. And there was also something notable in this release, $959 million net investment securities charge that led to 24-cent decrease in earnings per share during the quarter. So some interesting dynamics. Not every bank is alike, obviously, but the macro clearly playing a factor in third quarter results, guys.
Shepard Smith here. Thanks for watching CNBC on YouTube.